it's been a really very major year for us on a number of accounts. Certainly, first up, we've changed the name of the company from African Mining and Exploration to Savannah Resources, and I think that really was there mainly to underscore the sort of changes that we've been undertaking with the company. There's clearly been a change in leadership in the company as well. I've come on board as CEO around about sort of 3 months or so ago. Mark has gone over to our sister company, Electo, brought in some further executive staff as well. And apart from that, we've also sold our gold projects in Mali to Electo and have established a very significant position on the Electo register as a result. And finally, we've made the first of our new investment initiatives by acquiring an 80% interest in Matilda Minerals, which owns quite a significant heavy mineral sand project in Mozambique. So there's just a little map that sort of describes the present range of activities of the company at the moment. And I think, whilst it's illustrative, I think the main point I'd like to sort of make is that what we've really deliberately tried to do is expand both the project focus and the commodity focus of the company away from being strictly gold and strictly associated with Mali. And this is really sort of part of a sort of a wider strategy, I think, to both de-risk the company but also open us up to sort of further opportunities. And I think there's a huge amount of optionality built into the way the company is actually structured at the moment. Optionality in the sense that optionality around different geographies, both Mali and Ethiopia, and then more recently with our investment in Mozambique. We've also widened the commodity suite from strictly gold into both gold, copper in Mauritania through our investment in Electo, and most importantly, as a result of our taking a major position in the Mozambican mineral sands industry. Just by way of a little bit of background, and I am a little bit reluctant to sort of talk about this, but I've been sort of forced into at least introducing the company by introducing myself, and I have been around for, I regret to say, for some time in the resources industry, around about sort of 30 years. Fortunately, that's been associated with some amount of success, and I've been behind the establishment of 2 major listed companies in Australia, both of which sort of started off in very sort of similar ways to Savannah. That is, small capitalisation companies like Savannah. The first one was in 1987, just before the market crash. And funnily enough, I think provided a terrific opportunity for us to sort of build a major company. Immediately after the crash, there was sort of a large number of opportunities for us to invest in, and I feel that the current market context is somewhat similar. It's a rather bombed out junior resources market. There's some interesting opportunities floating around at the moment. Both of these also, in both of these companies, employed the similar sort of business strategy. That is a diversified mineral strategy, a diversified project strategy, and really what I've tried to do with these companies, and demonstrably successfully, was use one project to, if you like, support the other. And as a result of that, and the application of a little bit of time and judicious hard work, I'm quick to add, basically developed both companies into multi-$100-million resources groups. Savage was one of the major mid-tier companies in the Australian Stock Exchange in the mid-1990s, and more recently, Hillgrove Resources had a really very successful track record. Took that company out of liquidation, recapitalised it, introduced it to a series of projects, and took it to having a market capitalisation of about $200 million by the time I left, and very unusually in the resources context, it actually was a dividend payer as well. So I was sort of pretty pleased about the result there. In terms of our in terms of our board, I'm very well supported, both with a good team of non-executive directors, all of whom are exclusively equity motivated in terms of payment. None of them receive directors' fees, so their interests are absolutely and exclusively aligned with those of shareholders. The only way they make money is if you, as shareholders, make money. Also supported by an excellent technical director, Dale Ferguson, who I've worked with for a number of years, and a really terrific geologist, very able gentleman, and he's joined the team. He's Perth-based, and he's certainly leading the charge with us on the technical side of things. Michael McGarty, our CFO, is actually in the audience, so he's raising his hand there. He's a very capable individual, and we've certainly been sort of stretching him dramatically over the last few months with sort of series of deals, capital raisings, and sort of restructuring, and he's been handling himself marvellously to the task. Just looking at some of the key data, actually as of today, I think we've got a market capitalisation of around about 5 million. We've got 138 million shares on issue. We do have a few warrants and options, but I'm very quick to say that most of those have an average exercise price well in excess of the current day share price of around about just over 4 pence per share. One of the major things I've looked at doing is really solidifying the quality of the balance sheet. Obviously, that's been achieved as a result of a couple of capital raisings, both from myself. I subscribed for £500,000 worth of new shares in the company, and more recently we undertook a £500,000 capital raising, which was very ably led by our nomad and broker N+1 Singer. So we have a cash balance of just under £1 million at the moment, and complementing that is, of course, our strategic shareholding in Electo Minerals. We have around about a 25% shareholding in the company. As of today, it's worth around about $3 million. So if you look at sort of current assets, we've got around about sort of £4 million worth of current assets. So we've materially strengthened the balance sheet over the period of about 4 months. We've got a pretty good register outside of myself with my position, which, as I mentioned, came as a result of my subscribing for shares. We've got Praetorian Resources, which is run by Charlie Cannon-Brooks, a long-term shareholder in the company. Fisk, and there's some people from Fisk here today, have been a long-term supporter of the company and recently stepped up in the recent placement as well, as did City Financial, which is a new shareholder. SVS is a new shareholder. CQS is a shareholder from the original float of the company, and a couple of our new vendor shareholders from the Mozambican project. So just in summary, we've got 152 million shares in Electo. We're the first largest shareholder, and we enthusiastically support the efforts of Mark in terms of taking that company forward from here. Our major project outside of our investment is the Jangamo mineral sands project in Mozambique. Mineral sands comprise ilmenite, rutile, and zircon. They're sort of pretty sort of fundamental, basic, if you like, industrial metals, which are used particularly in ceramics in the case of zircon, and for the production of pigments for paints, inks, automotive paints, paper, and those sorts of products. So it's sort of a very sort of fundamental industrial commodity. In terms of recent market price moves, it has been a time of cyclical downturn in heavy minerals prices. This is something that's been experienced routinely over the decades since really the 1960s. I think it's an excellent time to actually be taking a solid position in a new mineral sands project at the moment. So I'll talk a little bit more about the project in a moment, but what we do actually have is great optionality on an improvement in mineral sands prices, which are sort of is thought to occur over the next couple of years, particularly as the Chinese economy moves from being a infrastructure and investment influenced economy to more of a consumer-driven economy that will be using paints and various sort of consumer products which heavily use pigment. So I think it's the right investment environment for us to be taking a position in mineral sands at the moment. Just by way of background, we acquired 80% of Matilda Minerals. The other 20% is actually owned by an Irish national who's been living in Maputo, which is the capital of Mozambique, for about six or 7 years. Originally worked with the Irish embassy in Maputo. He's a fluent speaker of Portuguese, and importantly, he's not a Mozambican general, I'm pleased to say. So. And is actually leading the charge on the ground as our country manager, and doing a very, very able job indeed. I think we have bought the property for a relatively modest consideration, 125,000 Aussie dollars in cash and 400,000 Australian dollars worth of shares in Savannah itself. And there's some milestone payments there as well coming up. And it's our obligation to sort of fund the project all the way through to the commencement of a feasibility study. Just by way of background, Mozambique is really one of the sort of the prime investment destinations if you're after heavy mineral sands. It's got a 2,700 kilometre long coastline, very attractive coastline. But apart from the visual appeal of it all, it's actually one of the richest mineral sands countries in the world, and really reminds me, I suppose, of Australia as it was in the 1960s, in the sort of very early stages of the growth of the Australian mineral sands industry. So I think there's still a lot of opportunity. I think there is still a lot of material to be found, and I think we've got an excellent position with our Jangamo project. Down here in the southern part of Mozambique. Just in terms of the setting, you've got Kenmare up in this part of the world. They're now in production, so there's proof of concept of being able to successfully develop materially large deposits into operations within the country. The geology along the coast is generally well understood, although it's still relatively lightly explored, and some of these sequences run very deep, as I'll show you in a moment. Importantly, particularly where we are, there's actually very good infrastructure, and this is not tiger country by any sense of the word, and we sort of enjoy both good access with roads and ports. And demonstrably, it's a pro-mining government. There's a lot of money that's going to be thrown at Mozambique in coming years. It's got iron ore, it's got coal, it's got heavy mineral sands, and this is really going to be, one of the growth economies in southern Africa. Zeroing in, on our own area. It's this 180 square kilometre area here, which sits on the western side of two major licences owned by Rio Tinto. This is actually an area that was relinquished, very reluctantly I might add, by Rio a couple of years ago, and our partner was fortunate enough to be able to pick it up. There's a major series of strand lines that run down the coastline here. Importantly, Rio's actually, and rather unusually, announced an exploration target of between 7 and 12 billion tonnes of heavy mineral sands at this project, the Matamba project, together with another resource nearby. So it's unusual for Rio to do it. They only generally do this when they have what's described as this Tier 1 project. So this is a world-class deposit they're sort of talking about here. And part of our area, we believe, sort of runs through part of what is effectively the Matamba deposit. The Rio ground sort of shows that the mineralisation grades between about 3 and 4.5%, which is rather good, and has a low level of slimes. The heavy minerals in Mozambique are characterised by high levels of ilmenite rather than rutile, but it's ilmenite rich and zircon rich. In terms of where we're at the moment, we actually acquired the project on the 6th of October, and I think as a demonstration of our execution abilities, we were sort of fortunate enough to be able to put in place an exploration program of 2,000 metres of drilling, which we concluded in November. So literally about a month and a half after we purchased the project, we'd completed 2,000 metres of drilling with about sort of 28 holes. A lot of those holes were sort of concentrated in this area here, so sort of we're hopeful that we'll be able to outline some pretty sort of solid drill intersections when we release our assay results, hopefully in the early part of February of next year, and a number of scout holes out here in the western part of the tenement. Basically, every hole that was drilled showed evidence of heavy minerals, and some of the pan concentrates looks like they got up to grades of at least 5%. So visually, it looks very, very promising in terms of the results. The material has actually been sent to TET. The samples are being prepared at the moment by our laboratory, Bureau Veritas, and those samples will then be sent to Australia for assay and mineralogical analysis. So the plan post the announcement of the assay results next year will be sort of clearly to evaluate the results, but we're sort of hopeful that they'll provide the justification for a second round of drilling to be undertaken in probably the second calendar quarter of next year, probably something of the order of about 5,000 metres of drilling. In marked contrast to gold drilling, it's been refreshing to do some drilling in heavy mineral sands. It's a much cheaper exercise. You're drilling for really generally down to sort of depths of 50 to 60 metres. You know, you're not talking about diamond drilling, you're not talking about 300 metres of drilling, and you're not necessarily talking about terribly close space drilling. So you get really very good bang for your buck in terms of drilling of these types of deposits. And in our case, it's cost us around about £250,000. So I'm really pleased with both the results and how the team applied themselves to the task. Just repeating the point just around existing infrastructure and services. You can see the main national highway that actually runs through the centre of the tenement here. There's a disused railway line that runs up to the port of Inambam just up here, and that would actually make an ideal export port for the export of heavy mineral concentrates. It's quite sort of weatherproof as a port. It's really relatively shallow draft. It probably needs some dredging. There's an existing long jetty there, and it's sort of really ideally sort of situated to act as a relatively low-cost piece of infrastructure to allow us to actually develop whatever it is we find down here at our Jangamo project. I don't think we actually have a world-class deposit there, but I think what we do have, and I'm pretty confident we have, is we at least have part of a world-class deposit, and I think that's a pretty good start for a little company with a market capitalisation of £5 million. So we're certainly hunting in the right territory. And my experience always has been, you know, it's always good to go into areas that are good neighbourhoods that demonstrably contain resources of, you know, of significant size. I've done very well out of proving up resources like this in this sort of context. I've done it before in early stage investment in coal seam gas, for example, and I think this particular project has those sorts of hallmarks for sort of major value accretion. And in terms of accreting value in this particular project, our primary objective for calendar 2014 is to come up with the JORC resource in the second half of next year. And I think that's sort of a reasonably achievable objective. So it's a great maiden new project to add to our asset portfolio. I might just sort of quickly sort of talk about gold in West Africa. Mark is here as well, and he'd probably be able to sort of talk about it much more authoritatively than me. So I'll dob you in and say that after this, everyone should feel free, I think, to come and ask Mark. Stay for the wine, and I can promise a bit of wine with it as well. But I think the main point, I might just sort of really hit the highlights in terms of, you know, my sort of broad sort of thoughts about it. the way that Electo is now currently conceived is that it has sort of major positions in, I think, some of the best geographies and the best geologies in the northern part of sort of sub-Saharan Africa, both in Mali and Ethiopia. Mali has, has an excellent history of gold mining and gold production. I think it's one of the sort of prime destinations for the discovery of multi-million ounce ore bodies. So it's a great place to be. There's just no doubt about that. And there's some impressive resources and impressive names that've met with considerable success operating in this part of the world. And the geology is right with the operating in this greenstone belt. This just gives you a little bit of an inkling as to the overall sort of setting, and it's a target-rich environment, and I think Electo's Kasanto project I think holds a lot of promise, apart from the Ethiopian projects, which sort of total around about 3,000 square kilometres in area. I've had a look at some of the work that Electo's done, particularly on the Western licence, the Metacal licence, which is quite large, I think about 2,000 square kilometres in area, and really there's some outstanding geochemical anomalies with some really good soil geochemical numbers and stream sediment numbers. There's some very, very large anomalous zones there. And I think that's been underscored by the recent interest in these projects that's been shown by Centamin. There's recently been announced a $14 million joint venture whereby Centamin's farming in to earn up to a 70% interest in these projects by spending $14 million. More importantly, they've committed to spending about $4 million over the next couple of years, and I think the thought is they might actually spend that a little bit more quickly. So there's some serious money and some serious firepower that's going to be thrown at these projects over the next little while. Kasanto, I think this has got all of the right hallmarks as well for a major discovery. Clearly, it's a well mineralised area. Mark's work over the last couple of years has already outlined a 107,000 ounce resource there. That's only drilling part of this line of strike of mineralisation, and the mineralisation remains open along strike to the sort of northwest and southeast, and certainly down dip. It's only been drilled down to about 60 to 70 metres. So I think we can reasonably expect to see a material increase in that resource over the next little while on the back of drilling that I think is presently being undertaken by Electo at the moment. Just back to that area as well, there have been some recent artisanal gold rushes in the area on the western part of the Kasanto tenement, and it looks pretty exciting what they've actually outlined there. Electo's been doing some rock chipping and channel sampling there, and I think the thought is that should come up with some pretty impressive numbers. In fact, there were some numbers announced today. So I think this will provide an excellent news stream in parallel to the stuff that we'll be doing with our mineral sands project in Mozambique. That's just a little bit more on those things. I think the major point is that we're very sort of keen on being able to deliver a solid sort of news stream. I think having a sort of multi-project approach will make that a whole lot easier. I think it will be a news-rich environment for us, and we'll be able to sort of run a series of sort of parallel sort of news streams during the course of 2014. So clearly focusing in on Jangamo and our assay results, and hopefully some resource numbers in the latter part of the year. Just one thing I would say is that this is a work in progress, and I think I personally would like to add to our portfolio of projects. Gold is clearly one of the key commodities that we'll be sort of following up on. I personally like copper, and I think gold and copper are two of the best commodities. Gold is the best of the precious metals, and copper is the best of the industrial metals. I've had a sort of long and successful history of bringing forward copper-gold opportunities, both large-scale mines, medium-scale mines, and smaller copper developments. So that's sort of clearly on our radar to secure a copper project for our portfolio. Just sort of perhaps just recapping on some of the incentive arrangements. This really just sort of underscores what we've been sort of talking about. I'm exclusively equity motivated and incentivised. They're the ones that I bought. There are no bonuses, no pensions, no benefits in kind. What you see is what you get. I don't get anything, and I will be talking to our CFO about the £1 payment after this as well. So that largely is sort of the story about the company. It's been a busy 6 months. It is a work in progress. We are continuing to shape the company. I hope that we'll be able to introduce some further projects. You've got our shareholders have got a very committed management group. We've got a very supportive non-executive board. I think we've got a terrific investment in Electo, and we've got a position in a world-class mining or mineral province in Mozambique, and we have ambitions to really deliver over coming years, and I'm looking forward to the task. So thanks, and that's it.